What's up, everybody? Welcome to the Stocks channel. My name is Cory, and today we're going to do technical analysis. So let's crack open this chart and see what's going on in the stock market today. All right. Today's SPY was up 0.18%, and we are starting to break out of the bull flag I was just showing you last night. And in order to see that bull flag, let's switch over to the 1 hour chart. And that was the bull flag between 426 and 429 after that bullish impulse higher. Now, as far as the measured move goes, if you just take the distance from the bottom of that bull flag to the top of that bull flag and you take that measured move on the breakout, we did reach that price target with today's price action and then immediately saw selling back down to retest the breakout as support. So that is what we're going to be looking for into next week, is whether or not SPY 429 at the breakout is going to hold as support and then take us to higher prices, or if we're going to start breaking down after this false breakout short squeeze above resistance and then continue to see some type of correction. So going into next week, the number one level to watch is going to be right here at SPY 429, because if we break below it, it is possible this was a little bit of a bull trap breakout to squeeze out the last remaining bears before we correct this leg higher. And it is possible we do see some type of correction because of the latest bull action that hasn't seen any significant correction, and that's mostly coming from big tech sector. So next week is going to be very easy as long as you pay attention to that breakout level that we just talked about. And on the daily chart, you're going to see that happening right around the 5 EMA. So there is no doubt, looking at this chart, we are still in a very strong bull trend, and there's still people out there trying to call for corrections and crashes. And even though a correction could be around the corner, there's just no way this market is going to crash without a black swan event, and that is a loser's game trying to guess when a black swan event is going to pop up. Just continue to follow the price action and let the chart do all of the talking and manage your risk at these critical levels. I just talked about the hourly chart support, and if we start breaking down below that and trending lower, we will be looking for the gap fill down here below 423 and the strong support at the breakout at 420. So don't panic if we start to see selling. It's completely expected and completely normal. And the price action is going to tell you we're going to see more selling if we break that support level. However, on the bullish side, if we continue higher, this break above 430 is a bull flag breakout, which easily takes us into the 440s. So you cannot be bearish above 430. You need to wait for support to be lost and then let the price action guide you to lower prices. On the NASDAQ 100 triple Qs, we were up 0.38% today, and the triple Qs are still in the bull trend above all the moving averages with the price action. And we have no way to know we're going through the big tech correction until we start losing support down here right around 347. And I am still calling this the bear cave between 350 and 360, which means if you're taking longs up here, you need to be very cautious and manage your risk down here at support. Because if we break down, I am looking for 337 and the gap fill at 333 as very likely targets to finish out the big tech correction, because we eventually will need to correct this very massive bull run that we saw in the tech sector. Again, that's just an idea. We need price action to confirm it, which is going to require the breakdown through support. The next bull breakout is above 355, and that'll take us to the next target higher at 360. On the Dow Jones, we were up 0.14%, and the Dow Jones is still showing that bull breakout above 336 with the next upside targets at 341 and 346. If we break support at 336, look for support at the rising 20 daily moving average right around 334. On the Russell 2000 IWM ETF, we were down 0.81%, continuing that rejection from resistance, but we're now right back down to support, and we're no longer outside the upper Bollinger Band. For that reason, I would not be surprised if we start to bounce as soon as Monday from this support zone between 184 and 185. If we break down below it, look for a retest of the 200 daily moving average and critical support zone between 178 and 180. On the ARKK ETF, we were down 0.4% today, and we're still building up that bull trend, so it is possible we are trending higher towards 44 and then 46. Manage your risk right at the breakout between 40.5 and 41.3. On the VIX, we were up 1.32% today, and the VIX is just absolutely crushed down below 15, so there's really nothing to talk about on the VIX other than just identifying this is still a very low fear market, which is exactly what you see in bull markets. On Bitcoin, we're currently down about 0.25%. We still have the lower high breakdown from 28,000 below 27,000, so we still have the price target at 24,000. We're not getting bullish until we break to a higher high above 28,000. On Amazon stock, we were down 0.66% today with another rejection from 125, and we are starting to look a little weaker as we're breaking down below the 5 EMA, but we're still bullish above support at 121. If we break the support at 121, we have the support trend line and other support zones between 114 up to about 117. Next up is Nvidia stock, which is up 0.68% today, and this has been a heavily requested stock to bring back because of where it's currently at after earnings. Remember, I made a special video on Nvidia specifically, and I said after earnings, there was a good reason this stock was going higher, and it was likely just going to go sideways and build out a trading range and bull flag before going any lower or higher from here. So as we can now see, that is exactly what is happening on Nvidia. It is just going sideways and building out some type of flag, and from that flag we need to see a breakout to tell us which direction we're going next. Now, while all of that is happening, we're getting the rising 20 daily moving average, which is coming up to support price, which is going to significantly increase the probability this stock goes higher and not any lower. And the higher price target that I have on the chart is 427. So I still think you're playing with fire if you're shorting this stock, because there's a good chance we're going to break out of this bull flag once the 20 daily moving average catches up, and then go higher into the 420s and possibly even higher. So if you are still shorting this stock, you need to be aware this is a very bullish chart that wants to go higher, and you're really playing with fire if you're just recklessly shorting it thinking it's going down to fill the gap in the low 300s. I've seen a lot of bears say that Nvidia is going down there to fill that gap, and I'm warning you, you should not be listening to people that say stuff like that, because they have no clue what they're talking about. And if you're going to make a trade that can go that low, you sure as hell better wait until we break down through support at 374. So if you want to get bearish on Nvidia, you need price action to break this support level, or you are going to lose a lot of your money. The range we're looking at right now is 374 to 398, and if we break 398, that is going to be the breakout that sends us to 427 or higher. So you need to be aware of this range between 374 and 398. And you can trade that range, but the breakout of that range is going to be very impulsive. And I'm not saying it has to go higher. It can break out and go lower. But at least if it breaks down, you know objectively you can short the stock, and you're not going to get burned if we get the bullish scenario, which is the highest probability chance. So the odds are Nvidia still going higher because we still have a very powerful bull trend. And there's no reason for this stock to go lower unless we break support. On Tesla stock, we were up 4.06% today with a gap up open, and we're very close to the price target up there at 262, which is the gap close. And remember, this is a bull breakout above 215, but now with the gap below, we're likely going to see some type of pullback to fill that gap before we go fill the gap to the upside. The reason I think we need to pull back first is simply because we're outside that upper Bollinger Band, which significantly increases the probability we're going to pull back before going any higher. So if you buy the pullback, you're managing your risk at the breakout at 230. On Apple stock, we were up 0.22% today with another test of the previous all-time high. So Apple is churning around at the previous all-time highs, and the longer it does that, the more likely it's going to break out and start closing at brand new all-time highs. So watch that critical resistance at 182, and the critical support is down here right around 177. On the financials, we went absolutely nowhere today, and we're going to be a lot more bullish in financials if we can start closing above the 200 daily moving average. The industrials were down 0.25% today, still with the bull breakout above 101.5 and starting to build up that bull trend, so the industrials could be getting ready to run. The healthcare sector was up 0.31% today, trying to make that higher low, but we need confirmation with the break above 131, and then we'll be on the bull in the healthcare sector all the way up to 137. On the energy sector, we were down over 0.5% today, trying to find support at the 50 EMA, but overall I'm still looking for the possibility of filling the gap at 73, even though in the short term we might fill the gap above 83 first. So jumping back over to the S&P 500, this is another bull breakout from a bull flag, and very early in the week we're going to find out if the breakout holds or if it was just a quick bull trap breakout above resistance to short squeeze before we go through the correction in June. There's a very good chance of a correction, but we need confirmation in the price action. So while we're prepared for a correction, we have no action to take until price action confirms it's here and we start losing support and we see the bull trend rolling over. Let the price action do all the talking, and you're instantly going to be a much better trader. This will be the last day to claim 50% off Bang Trade Alerts or the Stocks Channel Discord server. So if you want that 50% off discount for your first month, click on the link in the description of this video. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.